Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday. Welcome to the latest episode of the Prime Property Finance Podcast, where we make mortgages and property finance as simple as possible for you to understand and help you grow your portfolio or buy your dream home with clarity and confidence. So the October deadline, what is it and why your outdated tax return could block your mortgage? Listen to this episode and we'll go a little deeper to help you understand what this October deadline is and how it will impact you. Before I dive in, I'm just going to give you a quick update as to what's going on with me and my life and business right now. It's been a really busy period for us in this summer. We've just employed another broker, which we're really excited to have on board, and we are still very busy considering it is the summer period. But we're looking forward to the next run now in towards the end of the year, where lots of people's deals are coming to an end and we're supporting them coming to the end of their fixed rates and getting them new deals. And also there's usually an uplift in activity in the buying market between sort of September and Christmas. So we're quite excited about that. And on a personal level, I've just finished doing my house, which has been a long process, and I'm very much looking forward to a family holiday. So signing out for a couple of weeks after this. So really excited about that. So let's dive into this episode. And ultimately, this is all about being ready when it comes to protecting your income and your affordability and actually getting your tax returns in order. Now, if you've got strong income and you've got great cash flow and you're ready to buy, the lender may turn around and say, we can't use your latest tax return, it's out of date. Suddenly the figures you were relying on to borrow are no longer valid. So if you can imagine you've got your most up-to-date return submitted and it's ready to go, and the lender can see that your most recent income, your affordability is strong, then you can breeze through that underwriting process without any dramas, and you then understand that you can buy a property that you want and not miss out on that potentially dream home of yours. So in this episode, I'm going to explain why October the 6th is a key date for anyone who's self-employed, who's a business owner or a landlord when it comes to mortgage affordability, and what you need to do right now in order to stay mortgage ready. So each year from October the 6th, lenders start asking for the most recent tax year's data. Usually when we apply for a mortgage for someone who's self-employed, a director of a company who may have dividends or has income from property and land, then the lender will want to see usually a minimum of the last 2 years' tax returns. Now, if those tax returns were from April 2020, ended in April 2024, when it comes to October 25, for instance, that data is also obviously 18 months out of date. And so lenders want to see the last 12 months. So anything after that is considered out of date from an affordability. So it's difficult for them to take that on board. So if you fall into one of those categories, your borrowing power is based on your tax return. So after October, lenders want to see the latest year. So if you haven't submitted it yet, then they can't use it. So when that tax year ends in April, from October, they want proof that you earned the same in the most recent year than what you did in the last year. And what they'll do is they'll look at your tax computation, or otherwise known as your SA 302. So how does this affect you? So anyone who is self-employed, a sole trader, a limited company director, or landlord with rental income, basically anyone who's not on PAYE. So what are the 5 steps to stay in mortgage ready? Step 1 is you need to understand what lenders need. Basically, lenders base your income on your assessment on your tax return, or your SA 302 and your tax year overview. If you last submitted your return in the October of last year, then after October of this year, it's now out of date and most lenders can't use that. So, an old return means they can't use that income for affordability. So the next step is making sure you get your most recent return in early. So you don't have to wait until January to submit your return. And this is a common misconception. People think that because the deadline is January 31st, they have to do it in January. You don't. As soon as the new tax year starts on April the 6th, you can then submit it straight away if you want to. So submitting your return now puts you at front of the queue. It means your eligibility will be there for more lenders and avoid delays and potentially miss out on that dream home of yours. So the key takeaway here is get your submission in early, and that will allow you to have more borrowing options and a lot less stress if you are looking to borrow money before the end of this year. And then sort of step 3 is getting help from your accountant ASAP. Because most people wait until January, that's a reactive thing to do. And also accountants get really busy in that time frame. So if you need to get your books in order, then do it now. Generally, these next couple of months are a little bit quieter. So if you speak to your accountant this week, you can get your income finalized, get your tax return submitted over the next 6 weeks or so, and then that'll put you in a great position come October if you do need borrowing. The earlier you move, the more lending options you'll have available to you and a lot less stress as well. Step 4 is knowing the numbers before you apply. So your affordability is only as strong as the income you show in the previous tax year. You might have had a better year this year than you did in the year before, in which case there's a good chance we can use the latest years and not the year before, or we can use an average. So it always helps if knowing what those are, and the more evidence that we've got, the more lenders that we'll bring into the game in order for you to choose from. And ultimately, lenders don't guess what your income is going to be. They want evidence to back that up. And then finally, step 5 is working with a broker who plans ahead. Obviously, any good broker will flag this early if you are discussions with them. And so you want to get ahead of the game, do this while, be proactive rather than reactive. And then we can match you with a lender that may, like I said, use the latest year and not all the latest 2 years, or an average of both. Always, being proactive will always make sure that you get the best deal. So just a key outtake then really is that from October the 6th, the most recent tax return that you have will be the only one that matters to lenders. So if you haven't submitted it yet, you're out of the game, no matter how strong your income is. So get in touch with your accountant, get it sorted. We can make sure we get the best deal for you, or your broker, whoever it is that you're working with. But speak to your broker now if you're planning to buy or raise money before the end of this year and into January, because they will want to see the most recent return. If your most recent return is likely to be less, then this is something that's really important. You may want to get your application in September before that income drops, or if you know it's going to drop, because then they will use the latest 2 years, which were the 2 years before. So whilst that is valid, now is the time if you think your income may have dropped. We don't always encourage that. Obviously, that's up for you and your affordability to make sure that makes sense, but that might be a sensible thing for you to do. So ultimately, if you're self-employed, a business owner or a landlord, and you want to be mortgage ready this autumn, then act now. Speak to your accountant, get your tax return submitted, and speak to a broker who understands how lenders work. And if you need help with this, then check the show notes for our contact details, or you can DM me on Instagram at Gareth Morgan Property, and we make sure your next mortgage isn't blocked by outdated paperwork. Thanks for listening. Thanks for listening to this episode. Hopefully you got value from that. And if you do fall into that category of people, then like I said, do encourage you to get ahead of the game and be prepared. Thanks for listening. We really appreciate you spending the time to listen to our podcast. If you've had any value from it, we'd love for you to like and subscribe and give us a review, because reviews make a huge difference to us. And also share with anyone that you know that is self-employed, or a company owner or landlord that might be impacted by the information here, and that might guide them to get the best deal that they possibly can. So as always, we love trying to share as much as we can to help add value in any way, which shape or form possible. And so if this has done that, please share. Thanks for listening. See you on the next episode.